Hi, I'm Matthew Previtt. I'm a licensed CPA here in the state of Massachusetts. My firm represents taxpayers before the IRS and state taxing authorities. I've been in the tax field about 27 years, and almost the last 17 years I've been representing taxpayers exclusively before the IRS and the state taxing authorities. I'm here today to answer some of the top questions that we get from prospects about IRS and state tax problems. Often clients ask me about a tax lien. First, let me clarify the difference between a lien and a levy. Oftentimes people will get a levy on their paycheck and they say the IRS liened me. A levy is the actual taking of property, of intangible property like a bank account or finances. A seizure is the physical taking of property, your house, your car. A lien is a security interest. Just like when you buy a house, the bank puts a lien against your house until you pay the debt off so that they're protected. And that's what a lien is with the IRS or the Mass Department of Revenue. If you owe money, as soon as that tax is assessed, in law, there's a lien created, but it's not effective against your real estate or other things until it becomes public record. The statutory lien that exists when it's assessed essentially allows the government to pursue you and collect the debt. Once they actually put it on paper and file it in the Registry of Deeds or at the U.S. District Court, at that point in time, it's notifying the world that you owe taxes and that the government has a claim against your property. And so if you go to either refinance your home or try to sell your home and there's a lien in the public record, you're going to have to pay the government off first before that lien is going to get released. Another issue with liens is that they affect your credit report. They typically stay on your credit report for 10 years. So if you owe taxes, the IRS or the state files a lien, the credit agencies will pick that up. Another issue with that is once you resolve the problem, the credit agencies are not going to take that lien off your credit record without you proactively getting a release of lien from the government, sending it to the credit agency and showing them, look, my problem's been resolved. So the thing to keep in mind with liens is that it affects your credit, it affects your property, and there are various ways to deal with liens. Ultimately, if you resolve the problem, getting the lien released. But also there are situations where you may need to get a release of the lien just against one house that you own and allow it to stay on the other. And there are things that you can do like the lien partial discharges or lien subordinations where you kind of prioritize the government's lien after a new bank loan, and in exchange the government gets a big chunk of money towards your debt. So liens can affect you in many different ways, and there are a number of different solutions to deal with liens. If you have any specific or detailed questions about your particular tax situation, please call my office at 508-655-1500 or visit our website at taxproblemsrs.com.